Do, do, do. And another one bites the... All right. I did a podcast yesterday on Twitter. And when I was checking out the industry that it's in, I said, whoa, something is up there, guys. And I pop it up, and here it is, the S&P 500 Internet Software and Services Industry. I'm not sure about that ticker, if you're a broker, if that's what you need. SP 500 underscore 451010. That's on TradingView, that's what they put. Let me see if I get some symbol info. And that's considered an index. So there may be an ETF covering this one. But let's just go through it, man. I'm going to do some stage analysis on the weekly. But first and foremost, monthly. My monthly chart trading framework. And here is what got my curiosity. Here's a monthly defined resistance. Monthly defined support. I have the 12-month moving average. If the price action closes below, you don't want to be in. It either means sideways move or it's going to go down. The moving average is going to start flattening out. You don't know how long it's going to consolidate. And if it's above, then you're in uptrend. If it's below, then and it's declining, then you are in a downtrend. So right now it's here. It's fighting for its life. Remember it 7 months ago, closed right on the 12-month moving average. It opened lower and it managed to close above, back into a stage 2. But what's catching my attention is these Japanese candles, these long wicks. And in itself, long wicks aren't that unusual. But when you combine that with tests of resistance, defined resistance. Here you had the first tests here. Okay, first week above, second, and always closing below. You don't want that. Especially on the monthly, it's the higher prevailing trend. Its weight has more bearing on the smaller time frames than a smaller time frame's weight or direction on a higher time frame. So this one, if you have pullbacks on the weekly, on the stage, or any trend that's contrary to the prevailing trend on the higher time frame, that one's going to realign it in its favor. So now I have all these wicks, guys. Price action going back down below. And then the confirmation of this move confirms this important resistance that was not busted, that got refuted, that got brought back down. And I think this is the start of a downtrend right here. We're going to have to go all the way down here. We have the same situation right here on this defined support. I think we're going to go test here and we'll have the truth to see if we either have a close right here, close below, a solid close, or are we going to have candles that close above. What? Looks like a circle. But definitely I believe we're going to start going down, and we're going to zoom in on the weekly, and it's starting to flattening out of the 12-month moving average. On the weekly, we're probably going to see a beginning of a stage 3, and maybe some clues to where we need to be technically the price action for a stage 4 confirmation. But this could definitely easily be a top, guys. Let me put vertical line. This could be a top right here, the high. All right, let's zoom in. Weekly. Stan Weinstein. And look at that, man. This would have been your friend for the past lots of years, guys. All this green zone, stage 2, when it becomes gray, that means either price action is below 30-week average, or it's the 30-week average is declining, or you're underperforming the SPX below zero line. So usually this is stage 3 or stage 1. You want to be out. You don't know how long that's going to last. And you don't want to be playing uptrend stage 2, and then you become in the gray zone where it's a stage 1 or 3. And after that, you're just one step away, right, from a stage 4. So if you're in a stage 2, you're 2 steps away from a stage 4, right? You're stage 2, before it goes to stage 4, you have a stage 3, and then stage 4. So this is kind of your warning sign to be just put on the sides and wait for another signal. You kind of see it here, right? Here it says to go out, and then it just goes down, sideways move, and you still haven't breached those previous highs. So you're still, if you want emotional reassurance that you did well to sidestep, well, the price action is still hasn't surpassed. And look how much time it went to that stage 3, guys, or hugged that line, barely stage 2. And then after that, then you broke out. Then you had another nice run with some difficulties here below 30 average, which would have probably whipsawed you out if you're doing the trader's way. But the goal is to ride these stages until you get these ones. Even these ones would be profitable. Sometimes you'd get even if it pulls back and your sell stop wasn't raised, and you'd have what I call a push. You get in, get out, don't make that much money. Sometimes you get in and you'll get whipsawed out. But eventually you'll grab these big moves like this one here. Explode, never to look, never to touch the 30-moving average, going up. And you could probably ride it, most of it, all the way till you get out here, till you close below 30-moving average, below a trend line violation, below a sell stop that you moved up along the way, below the laws. All these techniques that Stan has to exit when the stage is about to end. Doesn't mean it's not going to continue, but it ends right in that moment. It needs a sideways move. You don't want to be chopped up there. You stay on the sideline and wait for the next signal. And this is the choppy zone. It's starting to happen. Starting to run to that monthly defined resistance, that invisible resistance, right here from the higher time frame. So even if you start had signals of continuation breakouts on these candles, I don't have the volume here, but you're still above 30-moving average, and let's say you had signals to get back in, then it would have been pretty cool, even if you would have waited for that weekly defined resistance right here, to always look at the monthly candle before getting in. Because remember, we never had a close on the monthly candle above this line, above the 840. So this is a false breakout territory, I call it. So if you get in here, jump the gun, you don't wait for the end of the month, for only the month to close below that line, then you're trapped. Trap. And back within the formation, price action below 30-moving average, approaching the Ichimoku cloud. Let me remove that. Define support. Remove this one here. Ichimoku cloud defined support. Stage 3, definite stage 3 territory. Let me get my arrow. So right now, next step is to go through that support to come and test that final support here. The monthly defined support, 730, 728. You're already underperforming the SPX. So the Internet Software and Services is underperforming the SPX for a little while. It's still gray because the 30-moving average is still flat or inclining. But it's a question of time. I think next candle or two, and that 30-week moving average is going to start declining. And then we're going to get it here red. So that's how I see it, guys. I really think that those long wicks, those Japanese candles on the monthly, and even here you have some symptoms of those Japanese candles on the weekly, that the buyers are not in control anymore. The sellers are applying pressure, and technically we've created a mountain, and all that weight of the mountain is going to go timber. You're going to have it go here, maybe pull back, test that 30-week moving average. Wait, that's a little too aggressive. Maybe more like that. Test that 30 moving average, and then maybe another try. And then down. Kaboom! Yeah, okay, maybe not. But definitely top pressure. Gonna bring this thing down. And let's just see how much bounce it gets off that 730 level, guys. All right. That's it, man. Internet software services. Don't fall in love with technology. It's been serving you well, but when it's time to bail, and it's time to bail, guys. Don't get trapped. See ya. Ciao.